Good afternoon, everybody. Good afternoon. Good afternoon. Why is my background like that? That looks terrible. I got to change that somehow, which I will do, but I am so glad everybody is with me here today. I think there we go. That is so much better. That is so much better. Can everybody see and hear me okay now that I'm out of the dark? Boy, Friday couldn't come quick enough, and I'm not sure if any of you had the pleasure of watching over the last excuse me, the last 20 minutes or so, the exchange between President Trump and Zelensky. I mean, you will have your weekends filled with watching that. Um, Boy, keep commentary for that for a different time. But just as what we're going to talk about today, okay, affects the markets, something like that affects the markets. That's why we have seen for the last 6 weeks, whatever it is, the market's on edge because the news cycle and the events coming out of Washington on a daily basis are adding confusion to everything that we know about the markets, the economy, etc. Now, that can be a good thing for trading, right? And that is exactly the reason why this volatility is not going away anytime soon. Happy Friday, everybody. I need 20 smashes here before I move forward, before we start talking about economic indicators. And the reason I'm doing that today, put this up here. The reason I'm doing that today is because we had a huge number coming out. It seems like every eco data point that comes out recently is a huge number. There are some that are more important than others. There are some that can be very market moving. And I get asked a lot by a lot of you, which ones should we focus in on? What does this one mean? How does this affect us? So that is what we are going into today. But again, I need 20 likes first. So, Danny, what are we up to right now? 22. Wonderful. 28. Bingo. Let's do it. Let's do it. So all of these data points, okay, and I post them for those of you that read the week ahead, which you get on Sunday late afternoon. Okay, we call it the week ahead. It's really a review of what happened, what to look forward to the next following week. I post in there the most important data points, eco data points that are coming up for the week. So the one that's coming out this Sunday, I've already done it. I could probably show you here just so you know I'm not BSing you. It's in draft mode, but for those of you that do read week ahead, you will see something like this in every week ahead that you get on Sunday afternoons. The highlighted ones, those are the really important ones for the week. So you can see Wednesday coming up, we've got ADP non-farm employment change. That comes out on the Wednesday ahead of Friday when we get the monthly jobs reports, which you can see I have highlighted down here. So that is definitely something that you all want to take a look at. Okay. And can it be information overload? Absolutely. Absolutely. But the economy right now and the markets are really in a place, okay, where one little thing, one little data point, one little news piece, like what just happened here that took 30 points off the S&Ps, can change the landscape of what is going on. So I'm trying to remove some of that inner information overload and really give to you guys the ones that we do want to focus on. Not that every eco data point isn't an important one, but we got to focus on some. So what you see here, and there's a lot of acronyms, GDP, PCE, ISM, PPI, CPI, blah, 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 blah. There's a lot of acronyms. I'm going to break them all down for you. Okay. And I am going to at least give you the quick skinny on what they are and why they are important to the marketplace. Okay. Earlier today, we got PCE, personal consumption expenditures. Excuse me, as you'll see in a moment here, that is the Fed's preferred inflation gauge. So when that number comes out, we immediately see a shift in the CME FedWatch tool, which is the prediction or the probability of what the Fed may do moving forward, raising rates, cutting rates, or remaining the same. The number that came out this morning, by the way, the PCE number, was pretty much right in line. It was better than expected in terms of it didn't show inflation increasing anymore. Didn't really necessarily show it coming down. Okay, but not as bad as some of the more recent prints that we got. So I am going to go through this with you. They're kind of in order of importance. Okay, they're kind of in order of importance. Boy, oh boy, tongue twister at its finest there. Again, can everybody hear me okay? Can everybody see okay? And I actually just moved GDP to the top for a reason. And I'll tell you why in a moment here once I know that you guys can all, okay, great. So GDP, gross domestic product. Okay, gross domestic product. What does it mean? Is it the most important? It's one of the more important eco data points. And what it does is it measures the value of a country's goods and services produced. Okay? Real GDP accounts for price changes. Okay? When real GDP increases, okay, that means we're in a state of expansion, if you will. It's showing that businesses are producing higher values of goods and services. Things are traditionally better. People are making more money when we see that. If GDP declines, okay, then the reverse holds. Now, here's the reason I put this up top, because just a few moments ago, about a half an hour ago, okay, there is an eco data point or a report that comes out from the Fed called the Atlanta Fed's GDP Now. And in fact, you will see that in my week ahead. Let me do. And the next one comes out on Monday. You see that right here. You probably, if you've ever noticed that before, you're like, what the heck is this? Why is Scott putting that in there, right? And you'll see it on Thursday. Okay. What this does is kind of give an bi-weekly or intermittent update on GDP forecast rather than waiting for the end of the month or the quarterly numbers. So the latest Atlanta Fed GDP Now forecast, and this is a forecast, this is moving forward. When we get actual GDP numbers, guys, that's in the rearview mirror. That's what happened in last quarter before that. What the Atlanta Fed GDP Now does is take current data to project where GDP might come out in the next report. This is not a good one. Okay. They just reported, I'm reading this right here, that they are forecasting for the first quarter. Okay. It was revised, GDP was revised down to a negative 1.5% annual rate. That is what's known as a contraction. Basically, less being produced, okay, and The last time we saw that, 3 years ago. 3 years ago. Okay? Now, historically, and what the Fed definition for a recession is if we see two negative numbers in a row, 2 quarters in a row with negative growth. That's a contraction. Okay? That signals a recession. Okay? And this was such a monster change, this forecast, because the last time that the Atlanta Fed GDP came out with their prediction for the first quarter, which wasn't too long ago, it was for an expansion of 2.3%. They are now predicting a contraction of negative 1.5%. That's why I've got GDP up there. Okay. Lots of important ones. NFP, non-farm payrolls. That's what we will get next Friday, the first Friday of every month. Okay. The U.S. Department of Labor Bureau Labor Statistics, the BLS, they release their jobs report, their labor report for the previous month. Okay. It shows the total number of workers employed. It excludes, and this is why it's called non-farm payrolls. It excludes farm workers, private household workers, nonprofit, and military. Okay, and employees of certain government agencies. And boy, that's going to be a doozy to see how that is calculated into the numbers next week. Okay. And when we see a number of plus 150,000 or plus 10,000 or negative, that is what the benchmark, the barometer, what we're looking at. So the data is generally expressed in the cumulative number of new or lost positions. That is a huge one. As that number goes up, and it's almost a little bit counterintuitive, quite frankly, because you would think that, wow, more people are employed. That's a great thing. Okay, we would all think that's a great thing, but the higher and higher and the more the more robust the labor market is, that means the Fed then has to start worrying about inflation, raising rates. So the NFP number that comes out next week, that is really one of those good news is bad news is good news types of numbers. If there is a beat, so I don't know what the expectation is for next week. Let's just say it's 150,000. Let's say that number's 300. Market's not going to like that. That means a lot more people are employed, which you would think is a good thing. A lot more business activity means rates aren't going down. On the flip side to that, let's say the numbers come in really, really light or even negative, heavens forbid. Okay. That will be an indication to the Fed that, all right, we might be able to get back to lowering rates again. That's a really incredibly important one to look at. Let's, I'm getting pinged here to show the word of the day here. All right, so let's do that before we continue on. And anybody that would like a copy of this at the end, let us know. I'll actually put a, I'll put a link up here. Danny, I am going to send you this. And if you can do your magic and put this into a bit.ly or a link or something like that, that would be wonderful. Let me send this to Danny so he can do this. Man, I've got so many market minds up here. I know, Danny, I know where to send it. I'm just looking for it on my screen here. I'm not sure if that will do it for you. Let me know if that's a link that we can post up here. Okay, back to some of the acronyms and some other important ones. We just got CPI and PPI reports. Those are inflation reports also. Very, very closely watched. All right, Danny, we'll get it in a little bit. Those are very, very closely watched. Okay, CPI, that's the consumer price index. It's a monthly measure, okay, of prices of a basket of goods and services that consumers are buying, consumers are paying. So it measures food, transportation, clothing, okay, and it gives us a range, prices up or down for the month. Then there's PPI, producer price index, okay, similar type of report, but now this is coming from the seller's perspective. Instead of from the consumer, this is coming from the seller's perspective. Can they raise prices? Did they have to lower prices? Did they have to, pass any price changes on to the consumer? And with all the tariff stuff coming up, boy, is that going to get muddled. And you're gonna have to have a PhD probably, in my opinion, to really figure that out, what it is. Okay, let's see, Danny. Let's see if that works for you. There is the PDF, Danny. You can do what you want to do with that and get us a link. Okay, so those are the kind of the inflation reports that are really, really important, other than the PCE. PCE is what came out today. PCE is what came out this morning. Market taking another leg lower here as a headline comes out that President Trump says Zelensky is not ready for peace with U.S. involvement. Wonderful, 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 wonderful. Okay, back to what we're doing here. PCE, personal consumption expenditures. Get that monthly, okay? It's another measure of the change of prices of goods and services which are purchased by the U.S. consumer. Okay, it differs from CPI, even though you would think it's the same. It differs from CPI in several ways, including the weighting of certain categories. So whether it's good, transportation, goods and services, whatever it might be, calculation processes. So just as you would have, let's call it a simple moving average and an exponential moving average, they're both measuring averages calculated a different way. PCE is what the Fed prefers to go by. Okay, everybody okay with that? Danny, thank you for that link there. Let me know in the chat here, everybody, in addition to the word of the day, if you would like a link to this presentation today for just a breakdown of what these economic indicators are. All right, moving on. Let's stick with the consumer, because the consumer reports, not the magazine, but consumer data reports have been the highlight over the last week. I'm going to talk a lot about that in my week ahead that comes out on Sunday. Consumer confidence, okay? Conference Board, which is a government entity, releases this data on the last Tuesday of every month. Okay, so we just got that earlier in the week. That's based on a monthly survey asking consumers how confident they are about the current labor situation and the current business cycle, business conditions. Consumer confidence is at a 3-year low right now, plummeted. Consumer sentiment, very, very similar to consumer confidence. Consumer sentiment, though, is not a government data point. Okay, it is comprised by the University of Michigan. It's very similar to consumer confidence, but it is a bit more detailed, asking more questions about the overall economy. So not just about labor and business conditions, but about the overall economy. That number, no good either right now. Okay. And I put a little footnote in here is if we see an increase in consumer confidence, consumer sentiment, okay, typically that's a good thing for the market. People are feeling better. They're out there spending money, right? They're more confident. We're at a bad low point right now for those. Okay, retail sales, another one related to the consumer. You can see how important the consumer data points are because the consumer makes up just over 70% of all economic activity. Apparently, the press conference this afternoon with Trump and Zelensky may not happen. Put some more fear into the marketplace. Thank you, gentlemen. Okay, so retail sales. It's a measure of all sales by U.S. retail stores, and it's published monthly, okay, by the U.S. Department of Commerce's Census Bureau. When retail sales are rising, again, there's no deep-seated confusion in this definition. Typically, retail sales rising means consumers are spending more, feeling better. Okay, you got to take a deep dive into that number though, because what the number doesn't show is any adjustment for inflation. Okay, I'm going to show this one more time here. Let more people get the word of the day up. I am going to post right now this link here, guys. Okay, so I just posted a link to this presentation. So you just copy and paste that link and you'll be able to access this. Let me know, those of you that have just copied that. Let's make sure that it works. If you can tell me yay or nay, if it works, that would be great. Thank you, Harris. Thank you, Harris. Appreciate it. Okay. Back to some more important data points that the market can move on. Durable goods. Okay. Close your eyes for a second. Close your eyes. If you hear the term durable goods, what do you think? What do you think those goods are? Those goods are washing machines, refrigerators, freezers, okay? Bigger items. So this measures the current industrial activity for goods, not services, for goods for both businesses and consumers that are typically not replaced for at least 3 years. Heavy equipment's a good one. You got it, Paul. Okay, so that ties into the consumer. Typically, businesses as well, that ties into consumer. Are they replacing more expensive items? Once again, if we see an uptick, if we see an increase in durable goods orders, sign of economic health, consumer spending, vice versa. Okay. Next one. This is just so unbelievable. What we're living in a dystopian universe right now. This is just crazy. Okay. PMI. What's a PMI? Purchasing Managers Index. This is a survey that's sent to senior execs across various industries. Okay. And there's a series of questions about new orders, production, employment, inventory levels, supply chains, all of that. Okay. And there is a measurement, a barometer on a scale. I don't even know what the scale is. It's not 0 to 100, but I know 50 is the midpoint. 50 is the baseline. If that report comes in with a number greater than 50, okay, that means things are moving along. We're seeing expansion in the marketplace. If that number is below 50, that means contracting. Okay, that's an important one. Personal income and spending, it is what it is. Goes right along with many of the other consumer numbers that are out there. This one, however, though, unlike when we talked about retail sales that didn't adjust for inflation, this one measures the inflation adjusted money spent by households. And this is durable goods and non-durable goods. So those longer lasting items and the items that we use every single day, paper towels, laundry detergent, whatever it might be. Okay, and then two more. They're both books. You don't want to read them, but they're both books. One of them is called the Red Book. Okay, this one also has to do with same store sales. Okay, this measures year over year growth of large U.S. general merchandise retailers. There's about 9,000 stores, but think about the big guys. Think about the Best Buys of the world, Kohl's, Macy, whatever it might be, the big retailers. This is really a measurement of what they are seeing with their activity. Target, Walmart, Costco, they're all included in these. Okay, and then the last one I'm going to go through, we go from red to beige. Okay, beige is such a blah color, but beige. Okay, this one comes out not monthly, but 8 times a year. 8 times a year. And the federal banks, the Federal Reserve banks, of which there are numerous, I think 6 or 8 of them across the country, they get together and they pool together all of the data from their particular place in the country. Chicago Fed, New York Fed, wherever they're from. And they put together all of this information on current economic conditions. Okay, and the Beige Book gives an aggregate measurement for economic conditions across the country. Okay, now, this is not the end-all, be-all, complete list of economic indicators, but we could probably spend the next 6 hours going through the rest of them. These are ones to keep an eye on. These are ones that when those numbers come out, typically most of them come out before the market opens. Usually 8:30 Eastern, 7:30 Central. Beige Book comes out a little bit later. Durable Goods comes out a little bit later. Red Book comes out a little bit later. Most of the big ones, though, come out before the market opens, just like PCE this morning. All right, guys, that's going to wrap us up for Market Minds for the week. Let's get to the wheel here. Ooh, doesn't look like there's very many people on the wheel today. This is a light one. I don't like that. I don't like that at all. But it is what it is. Here we go. And today's winner, is it going to be Frank, RJ, Ty, Richard? It's going to be between Ty and Richard. It's close, and it's Richard Mark. Richard, are you still here? Richard Mark, are you still in the house? I know you're always here, but are you here right now? That's the important thing. Bingo. Nicely done, Richard. Nicely done. Shoot me an email, sir, to that email address, mailing address, your size. Did everybody get that link to this presentation? everybody get the link that I posted to this presentation. Thank you, Danny, for posting that again. There it is. And with that, everybody, I hope you all enjoy your weekend. We all need a much well-deserved break. Have a fantastic weekend, everybody. Appreciate each and every one of you. See you on Monday.